Hey everybody, welcome this week to the Middle Class Investor. This is Seth Martin, your host, and I've got on the screen a chart of the S&P 500, and you can see, oops, sorry about that. You can see from here that we had a gap up. So the close was down here. We gapped up to here, ran up, or actually we ran down first. Gapped up, ran down, ran all the way up here, and then ran back down to here. So one of the things you'll notice just here on this chart is we've got this channel. There's actually a couple channels here. So let me zoom out. We got this red channel here that we're now down below, and so this was kind of a throw over, and we've come back below the channel. But then I've got this smaller channel here that represents the most recent movement up in the S&P 500. Zoom out a little bit, and you can see that we're still above the bottom line of this channel. And what I would say is, as long as we are above the bottom line of this channel, there's a chance this could still make a new high. And I'll show you a chart in a minute that reflects that in a little bit more detail. And so how can that be? You know, we've got this big sell-off, we've got this rally, and then another sell-off. Well, one of the things that's not apparent here, but if you look at the daily chart, it's a little bit more apparent. Zoom in right here. This run-up right here, it's not a very good, it doesn't look like 5 waves, but potentially I guess it could be. Let me zoom in and I'll show you what I'm talking about. So what I'm looking at is this move right here, from here to here. And you might say, well, why didn't you go all the way to here? And the reason is because if this is an impulsive wave up, then your correction could be this. It could be what's called a flat. This is a flat where the B wave, so A down, B up, and then C, where the B wave is higher than the initial impulse wave up. This technically this could be a flat, in which case it would come up here and make a new high. Probably sell off a little bit, maybe down to here, and then come up and make another new high. Maybe even as high as the top of the channel. So personally, I hope that's not it, because I'm positioned for short, but I'm sure you guys are probably hoping that that is it. Most people are positioned long in the market. So as long as we're above this line right here, just to be clear, this line right here, as long as we're above that, this still has a pretty good chance of going higher. Now, if I go back to the weekly chart, sometimes it helps to look at a weekly chart. One of the things I noticed here is if we end up having a down week this week, excuse me, if we end up having a down week this week, and we get a candle that closes below this current candle, then then this resumes bearish, right? Because now it would close below this line and below this candle right here, this candle, this one right here. And so, the market doesn't go straight down, so it kind of zigzags its way down. But again, this potentially this white candle right here is potentially a reversal candle. And the way that would be a reversal candle is if, and I know this sounds crazy, but so if next week we get a close above this candle, then I would expect this to continue up to probably this line up here. But if it goes the other way, sorry, I got something hung in my throat, I apologize. If it goes the other way, then I would expect this just to be a temporary pause in the downtrend. and then it should continue to fall significantly from there. So right now we're kind of in a no man's land, and that's okay. That happens sometimes, and sometimes you kind of sit on your hands and you don't really do anything. All right, let's look at yields. Let's look at the 13-week Treasury. If I can get it to pull up here. Same thing with the 13-week Treasury. This could just be a pause in the trend because the trend doesn't go straight up. And I would say as long as we're above this line, the trend, is going to be up. Let's look at the 10-year. 10 years pulled back a little bit last week as well. Same thing. We're still above, if you made a trend line, say from this low here, trying to see where maybe the wave 2 is. Let's say it's this low right here, a little bit of a guess. As long as we're above, let's say that trend, this can pull all the way back to here and then turn back up. So we're still in an uptrend on yields, which means we're in a downtrend on bonds. Let's look at volatility. Volatility, we had that huge spike right here in volatility, and then ever since then we've been pulling back. We had a little bit of a spike week before last. Now we're pulling back. Volatility is still very, very low, which is that means people are still the sentiment is still very bullish. So when you have a very, very bullish market, I think we've talked about how bear markets, bull markets don't end abruptly; they end kind of on hope. So that's why you have the volatility picks up, but you get some chopping back and forth. That's the hope. That's people. Okay, I'm going to buy the dip. I'm hoping it goes back up. It doesn't just end and then end abruptly. It ends kind of in a sideways and then down and then really down. That's typically how a bull market would end. Let's look at Germany. We've talked about Germany and these other markets. They look very similar to the U.S. market, and they continue to do so. Maybe a little bit more bearish though, just because this part right here didn't go up as high in the German market as it did in our market. Same thing with the UK. It looks weaker. You can see here it looks weaker. And believe the same thing with Japan. No, Japan may actually look strong. Yeah, Japan looks stronger, and you can see here Japan actually, it came down. Here's a low. Here's a higher low and a higher low, but no higher high. And then it came down and made a lower low. But then look what happened. It gapped up. It pulled back, ran all the way up, and closed above the high of the low week in this latest pullback. The low week is back here, but now this is a new higher low. So that's fairly bullish. So I wouldn't be surprised if Japan, kind of ground its way up to here. But if it does make a new high, what we'll be looking for is we'll be looking at the market internals in the U.S. market, because generally speaking, what you want to do is you want to be able to see, even though it's making new highs, the internals are actually lower than they were when the market ran up to here. So we'll be looking for that. Can't do it on the Japanese market, but I'll be doing it for the U.S. market. All right, let's switch over to the other charting tool. What I've got up is the euro. Let me put it on a weekly. So you can see the euro's in this big downtrend here. Really steepened right here, chopped sideways and rallied, and it looks like the rally is about over. In fact, that's if you look at the dollar looks just the opposite. The dollar sell-off looks like it's about over. So, but what we really need to see in the euro, and I'm nibbling on this now. I'm short the euro, but really what we want to be able to see is we want to see the euro kind of break through this area right here. Uh, you know, in not only make lower lows, but close lower. So we need to get a close below this line. So like a close that looks like that, where the close is below this line here, below all this congestion. And that'll tell us that the euro's likely done rising and probably, probably poised to pull back to at least here, this 1.15 area. So if we could close below here, which is what is that, 1.2322, something like that, look for the euro to make a pretty good move back into this area. And then we should get a little rally, but probably a lower high, and then sell off again. And like I said, the dollar should just be in the opposite direction. So you know, for those of you that trade your currencies, if the U.S. dollar is rallying, so you can see right here, this is the British pound U.S. dollar. So if the U.S. dollar is rallying, okay, and it's in the denominator, that means the British pound in this pair will be going up. So what you're seeing right now, and again, I was hoping for some sort of pullback in the British pound, never did get one. It kind of chopped, ground its way higher, never really did get a pullback. I was hoping to get one into here, never got one. So if the dollar begins to rally, that means in the Great British Pound / US dollar, the British pound should rise. So you should see a pretty strong rise in the British pound as the dollar rallies. Same thing with the euro. If the dollar rallies, I'm sorry, I said that wrong. Let me back up because I said that exactly wrong. British pound. So if the dollar rallies in the British pound against the British pound, then you should see the British pound roll over and come lower, and maybe we will get an opportunity to get into the British pound, but I wouldn't even think about it, and even then we would want to look at it and see how it looks, but I wouldn't even think about it until it pulled back into this area here. So look for the British pound to kind of work its way down into this area, and then maybe, depending on how this looks, we could consider going long the British pound. But as of right now, I wouldn't be interested in doing that. So the British pound is probably not as bearish as the dollar, but it is bearish. Now the US dollar CAD, now we should see, this looks like it's finished pulling back. Let's zoom in on this because this might be our best opportunity here going forward. You can see here that the US dollar CAD it pulled back pretty hard here over like a 2-month period, chopped and ground its way back up, and then pull it back again. So this looks like an ABC, okay? And C was almost 0.786% of A, which satisfies the ABC. Then you get a pretty good rally here. So this looks like a 1, 2, 3, 4, 5, and then a ABC. Okay, so 1, and then ABC, and this is, so you can kind of see it's tight here, but if you got it on a daily, it might be a little easier to see. You can kind of see an ABC here, and then we've got another rally up. So this could very well be a 1, 2, 1. We're gonna get a little 2 pull back to maybe here, and then we should see this take off pretty strong, at least into this area here. So, and maybe even all the way up to above this high here, this previous high. So keep an eye out for this pair, the U.S. dollar, Canadian dollar, and it looks like it could be very, very strong, very, very strong move. So, what else do I have in this list that we need to discuss? There's really, I guess, oil. Oil, man, oil still, it's hard to really say. I mean, I thought oil would have turned down by now. Um, um, it looks like if you kind of look here, um, this could kind of be an A, B, C, X, and then C. So this could be kind of a W, X, Y situation where you have this is W, A, B, C, W, this is X, and this is Y. And then Y is made up of five-wave moves. So you got 1, 2, 3, 4, 5. Now, I don't know if five's gone high enough yet. I couldn't tell whether that broke the old highs or not. But it's possible that this could go up and make a new high. And then we would look for it to come back to the fourth wave low at least. So, but bottom line is if oil gets over, if oil goes much higher than it is right now, then uh, this this bearish looking pattern might actually be bullish instead of bearish. So, but I say you give it, we could give it to, 66 and a half. Let's see what these, let me narrow down the time frame and see what these highs are. That's not going to tell us. Let's try 4 hour. Nope, let's try a 1 hour. Yeah, I need to go even lower. Let's do 30-minute. Okay, so here's the high here, 66.55. So see, you can see this did not make a new high. So, but you can kind of see a 1, 2, 3, 4. It may be that this fourth wave was truncated, in which case the bear market in oil has begun. But I don't know. I would wait for a little more. Oops. I'd wait for a little more evidence in oil, especially if you're if you're fairly long-term trader. It doesn't hurt to wait for a little bit more evidence. And so, the kind of evidence I would wait for. Let's just look at it here. You can see this ran up and had this big green candle here, ran up in a red candle, made a high, and then gapped up slightly, ran up but didn't really do much. So what I would look for is a candle, that even if it makes a higher high than this one right here, so let's say it engulfs that one, but let's say it ends up looking like that, where it's lower than this candle, and it could be higher than this candle and lower than this candle. But if it closes below this candle, then I think that's a pretty good signal for oil to continue in a direction like this, all the way down to this high 50s or whatever this area was. I can't remember what it was right now. 58 or something like that. 57, yeah, 57 and a half. So that's what I would look at for oil. Gold, excuse me. Gold and silver, they continue to look different. So silver to me looks bullish. Gold to me looks bearish, so I don't know. Maybe gold is bullish up into this yellow box here, and then it becomes bearish. But silver looks bearish like right now. I don't know. I mean, both of these are a mystery to me. I mean, it could be that this is A, B, and C, so it's going to be bullish up into this area, and so will gold. Maybe gold. if I can find gold. Oh, there it is, gold. Maybe gold likely, tracks with silver, and maybe they're both bullish up a little higher, and then they sell off. So I guess what I would do is look. If that's the case, then silver has more upside because you're talking about silver trading all the way here to almost 19 from where it's currently at is 16.4. And if you trade gold bullish, currently it's at 1330, and you're talking about maybe it going to 1430. So that's only $100 on gold. So silver's probably got the better upside if you're going to trade bullish. That's what I see there. All right, let me show you what I was talking about on the on this other charting system. This is a charting system that I use called MT Predictor, and I really use it for trading futures, but it's useful sometimes to look at some longer term charts too. So this is the run up from the 2016 low, this whole thing here, and you can kind of see again if this is one and this is a flat. So let me zoom in on this and make sure you can see it, because it takes a while to learn how to see these patterns. But if this is one and this is A, B, C, 2 down to here, so you can see the blue line here. I got 1, 2, and then this is all 3. Okay, so let's zoom back out. This light blue line is all 3, and then this most recent sell-off would be 4, and then we would have a 5-wave move up to something above this previous area here. So let's put it on the chart here and put a DP. And I guess I'm missing let me try this one. I'm missing the pivot there, so I need to make sure I click on the pivot. Okay, there's the DP. So we could very well have the market rally up into this 2,900 area on the S&P 500. So I hope that's not the case, but then maybe for you guys that's good. So you can see that we're still in a blue STF, so that means the larger degree trend, which would be the 5-week trend, is still up, but you can see it's down. It's weakening. It's been weakening this whole time, and it's still weakening. So if this turns black, or this continues to sell off further, then I would say the top is in, obviously. But if this starts to curl up and stays blue and the market starts to rally, then we're probably going to make a new high. I am not long the market though, so I am probably the worst person to ask about what do you think the market's going to do, because I think the larger risk is the market's is down for most people. I mean, I think for most people the market is not a place you want to be in right now. Now, if you notice here, futures are down 6 1/4 on the S&P. That's the E-mini futures. And if that continues until tomorrow morning, then obviously we're going to have the market's going to open down. And a lot of times what will happen is the market opens down. Anytime you have a gap on the open, if it's what's called an inside gap. So let's look at this real quick. I'm on a daily. Yes, I'm already on a daily. Okay, so an inside gap. This is the previous day here. Okay, so let's talk about what an outside gap is first. An outside gap would be the market opening up outside of this upper wick, or down below this lower wick. That would be an outside gap. An inside gap is where the market gaps inside the previous day's range. And what tends to happen is if it's an open gap, even if it's inside the previous day's range, it'll it'll sell off and close the gap, and then it'll move in the direction of the original gap open. Same thing with the down. Now, if you have an outside gap, a lot of times what will happen is the market will gap up or down, and then it'll just keep going throughout the day. So and there's lots of places in here where I could show you that happens. So you might want to look at the open and see now we're down 750. This could be a lot of times this will start turning back the other way around 2 a.m., 3 a.m., something like that. So a lot of times your low is put in around 2 or 3 a.m. So right now it's only 10 till 10 Central Standard Time. So we're still quite a ways away from 2 and 3 a.m. So it's hard to say really what's going to happen. But what's interesting is it's just chopping back and forth around this yellow line, which is just a trend line on this upper channel. That's all that is. But it's interesting how it's chopping back and forth around it, like it's important, like it's a tug of war. All right, everybody, that is it for this week. Thanks for coming in. Thanks for sharing this with your friends and family members. I think it's going to be important here in the next couple of years. I think there's going to be a lot of pain in the market, and it's not going to be good. But hopefully, you guys will be protected, and hopefully, the people you know will be protected as well. Okay. All right. Come back in next week, and let's talk. See what happens next week. See if we get any little more clarity on the up, either more bullish information or more bearish information. All right, buddy. Thanks a lot. Have a happy Easter, by the way. It's Easter Sunday, and it's probably the most important day of the year, and mainly because it has to do with it's Jesus' resurrection, and if the resurrection happened, which it did, according to a lot of people, then that proves that Jesus is God, and those are that's really, really important. It's even not more important than Christmas, although Christmas, I guess if he wasn't born, then nothing would have happened. But it's just an important holiday, and it's a good time to spend time with family and friends, and it's also in the spring, which is nice. All right, everybody, happy Easter, and we'll talk to you next week. Bye-bye.